Hi there, Mike Brady with Generosity Wealth Management, a comprehensive financial services firm here in Boulder, Colorado. Today I want to talk about investment management and planning. And one of the first questions to start with is, are you a trader or are you an investor? But before I really talk about that and how that kind of flows out into our planning, there's this great book called Conflict Division by Thomas Sowell, who's this famous economist. He's now in his 90s. And what he said is when you have a disagreement with somebody, whether it's political, religious, doesn't really matter, you got to think of it like a tree. You know, you've got a tree. You look at my hands here. Your trees are down. You know, the root of the tree is here, and then branches come out. And there's all these decisions, a decision matrix. And if you're disagreeing way up here at the top level, the top leaves, you've got to go back down the tree, down the limbs to where you might have had a conflict of vision, where you might disagree. We agreed all the way up to here, and now we disagree, and that disagreement, you know, from a philosophical point of view, then has repercussions all the way out here like that. And so I think of the same process when it comes to investment management and planning. Are you a trader or are you an investor? Very key. An investor is someone who purchases something, purchases an investment, assumes the future will be greater in the future, and knows that there will be ups and downs along the way, but makes very few changes to that along the way. A trader, on the other hand, is very actively managing, saying, wow, I want to buy this stock, this mutual fund. I believe that I want to time the market. I believe that now is the time that the market's going to go down, and so I need to move over to cash. You know, very actively managing it. That is a trader in a trader mindset. And a lot of the, you know, uncomfortable, the displeasure in the future is when you think you're an investor, but you have a mindset. You say that you're an investor. You've set things up like an investor, but then you have a trader mindset. That might be your tendency and your bias. Once you decide whether you're a trader or you're an investor, then you have to decide, do I take individual business risk or do I not? And that means individual stocks. Do you buy, you know, a certain company and be very specific to it? Or do you buy that broad sector? Do you buy the broad market? You could buy the automotive sector and be very heavy in that versus an individual automotive stock. Or do you buy the market as a whole, the S&P 500? Do you buy the international unmanaged stock market index? So it's really kind of a philosophy of, do you take, in addition to market risk, do you take individual business risk? That is a very key ingredient. And once you've decided that, then the question is, how do you do that? Do you do that through the various ways like mutual funds? You do it through separately managed accounts. You do it through ETFs, all of which require a very detailed, video to describe some of the pros and cons on each. And all of them can be not necessarily good or bad. It's just a preference. I mean, what's better, a sports car or a truck? Well, neither of them. I mean, it depends on what the purpose is. It depends on the individual as well. And so it's the same way with your particular investments. One of the most important decisions as well is, are you a believer in mathematics, the CAPM, the capital asset pricing model, meaning that, hey, I can figure out where the value of this market is, or this particular stock, and that's what it's either overvalued or undervalued? Or are you more of a behavioral finance person, believing that the market is filled with human beings who are emotional and sometimes make irrational decisions? And that's a very key decision to ask yourself and to philosophize about, and of course to talk with your financial advisor to say, hey, what do you think? What's your philosophy on all of these various aspects? Because they are important to craft a portfolio that you're going to be happy with. And the most important thing is that, not that every single day, month, quarter, year is happy for you, but that you're able to survive it. I think of it like a marriage. When you get married, you know that there's going to be some disagreements, and not every single day is going to be sunshine and roses. But of course, there's more days that are good than are bad, and that hey, I can weather this, that this is for the long-term good, and I'm a better person because I'm mashed up with this other individual in this thing we call marriage. It's no different with investments. You've got to stick with what the plan is that you've got, and that's where good investment management comes into play. Warren Buffett says that bear markets transfers money from the impatient to the patient. And so whether you're a trader or an investor, whether or not you believe in individual business risk or individual market risk, or how these things come together, the most important thing is to be patient, because even if you're a trader buying and selling and doing all this other stuff, there is a streak that's going to happen at some point that is not in your favor, and you've got to weather that as well. I believe in taking individual market risk, but not business risk. I believe in a more passive approach, being an investor, not a trader. And I believe in many other things that help, but I guide that with my clients. So anyway, that's it. Just want to talk about investment management and planning and kind of the thought process behind it. Always happy to talk about my philosophy and how it might work for you if my existing client, or if you're not, how it might fit with your individual situation. So Mike Brady, Generosity Wealth Management, 303-747-6455. Thanks.